The most attractive aspect of dividend investing is being able to live solely off dividends. Not having to actually sell shares of positions each month to fund your lifestyle, which will require you to sell more during down markets when volumes are dropping, and simply getting dividends no matter how the market is doing is much more appealing. But a question we need to ask is, once we have a number in mind, like I want $5,000 a month in dividends, we need to know how much money we'll actually need to have to earn that much in dividends. The key to figuring out how much you'll need to invest in order to receive $5,000 per month in dividends is actually pretty straightforward. There's a very simple formula that we can use to determine how much money we'll need, which looks like this. Investment amount needed equals desired monthly income times 12 over annual dividend yield. So for our example, if we take $5,000 and multiply it by 12, how many months there are in a year, that gives us $60,000 per year. The number that goes on the bottom is the annual dividend yield of whatever investment we're looking at, or the combined yield of your dividend portfolio. We can freely play around with this formula and enter different amounts for our yearly income and also the different yields we need to make our $5,000 per month. When looking at dividend-paying investments, the first type that most people typically come across are consumer staples. These are very popular companies that are known for paying dividends to their shareholders. So think of stocks like Procter & Gamble, Church & Dwight, Coca-Cola, and other well-established businesses that have been around for many decades and usually more than a century. These companies receive the most amount of coverage on channels like CNBC and Fox Business, as well as in stock market magazines and publications like Barron's. It's very common for these companies to offer investors yields of less than 1% to 2 or 3%. Let's pick a random consumer staple stock, one that's offered a dependable dividend for decades. Colgate-Palmolive is one of the most well-known household good companies in America. They produce products like Ajax, Irish Spring, Hill's Pet Nutrition, and of course, Colgate Dental products. As of the making of this video, their stock currently yields 2.37%, which is very typical for a company like this. We can now plug this number into our formula, which now looks like this. 60,000 divided by 0.0237, remember it's in decimals, we can calculate that we'll need $2,531,645.57 worth of Colgate stock today. Or if you were to invest in a portfolio of stocks that gives you a yield of 2.37%, that's how much money you'll need to earn $60,000 per year. That's obviously a lot of money, especially when we look at studies on just how much money the typical American has saved for retirement. Nearly half of American households have absolutely no money put aside for retirement. So even if you only have $5 put aside, you're basically doing better than almost half of US households. But the median retirement savings, which is the more accurate metric to look at because it removes the ultra-wealthy that skewer the numbers, is significantly less than $2.5 million no matter what age group we're looking at. For those aged 65 to 74, the median retirement savings is just $200,000. That's nowhere near enough money to live off dividends from your typical consumer staple stock. And many people learn this very early on, and it discourages a lot of people from continuing to pursue or even considering dividend investing. Now, if you happen to be in your teens or 20s or 30s and remain dedicated, you can eventually make it, assuming you have enough money to invest over the decades. So assuming you started early enough, know you'll remain dedicated for a few decades, and have plenty of disposable income to invest, you can achieve this. But I'd be willing to bet that this doesn't describe the vast majority of people watching. As much as I would love to say every single person watching this video is going to be extremely wealthy, isn't realistic, not for most. So going back to our formula, we have two different options before us. Our first option is we can lower how much we want in dividends each month, going from $5,000 a month to a more modest $2,000 or $3,000. But we face the exact same problem. A lot of money is required. If you want $4,000 a month using our previous example, you would still need $2.02 million. If you want $3,000 a month, you need $1.5 million. Even just $2,000 a month will still require over $1 million. Clearly, if you want to live off dividend stocks that the mainstream media recommends, it's only going to be possible if you're already wealthy. If you've made this much money, then congratulations, you played your cards right in life. The majority of the conversations that I have, though, involve people who don't have millions of dollars saved up. So if we want more income, the obvious choice we have to make is increase the investment yield. The kinds of investments that offer much higher yields rarely receive any kind of mainstream media coverage. It's what this channel revolves around, so if you want more high-yielding content, then feel free to subscribe. But there exists entire categories of stocks and diversified funds that offer significantly higher dividend yields that'll earn investors more income to pay for living expenses. And the majority of these investments rarely get any coverage by the mainstream media. When looking at these higher-yielding investments, we'll be able to see that earning $5,000 a month in dividends isn't actually as hard as it might seem. Let's look at probably the most mainstream category of higher-yielding investments, which are REITs, or real estate investment trusts. These companies hold real estate and pass the earnings on to shareholders, and they almost always come with much higher yields. One of the most popular REITs, which is Realty Income, currently comes with a yield of 5.63%. Using that number in our calculation, we can see that to earn $5,000 a month, we would need a little over $1 million. To earn $4,000 a month, we would need $852,000. For $3K, we would need $639,000, and then for $2K, we need $426,000. So that is a lot better than investing in consumer staple stocks, but that's still a lot of money. Let's look at some higher yielding options. Business development companies offer much higher yields than REITs. These companies invest in small and medium-sized businesses and pass on 90% of their earnings to shareholders via dividend payments. The most popular BDC is Ares Capital, which currently yields 8.52%. Using this as our new number, we can see that these are the updated amounts needed to earn the target income amounts. $704,225.35 for 5K a month, $563,000 for 4K, $422,000 for 3, and $281,690.14 for 2,000 a month. Now this is looking a lot more hopeful. The mainstream dividend stocks we saw earlier like Procter & Gamble could never make it possible for someone with a modest amount of savings to earn a significant amount in dividends. But can we go with an even higher yield? The answer is absolutely. Covered call funds are another high-yielding investment that come with significant payouts. Ticker QQQI, a Nasdaq 100 covered call ETF, has consistently offered a dividend yield of over 14%. Using its current yield of 14.65%, these are our new numbers. To make $5,000 a month, we need $409,556.31, and for $2,000 a month, we just need $163,822.53. I really shouldn't say just 163,000, but compared to the millions we saw earlier, I think it's fine to say that. Now, you should never invest your entire savings into just one holding. Ideally, if you do want to live off dividends, you should spread your money across many different stocks, funds, and sectors for diversification. But if you want to earn a large amount in dividends and you're not a multi-millionaire, then you have to focus on the higher yielding investments. But now a big question we need to ask is, how high of a yield can we safely go? Can we go higher than 12% or 14%? It varies depending on what kind of investment you're looking at. So for example, a REIT yielding 8 or 9% would be considered very suspicious and very risky, but that's completely normal for a BDC. What I found is, regardless of the investment, once you go above that 14% yield, somewhere around there, everything higher than that typically doesn't offer the same safety and stability with their distributions. A good example of this would be CLO funds. These are investments that hold collateralized loan obligations, and these can offer exceptionally higher yields. But if you pull up their dividend histories, you'll find that they almost always have a long history of inconsistent payouts. Then there's also synthetic covered call funds, and these can offer even higher yields, but these investments, as you can probably guess, are very risky. The other investments that I've covered up to this point offer a lot more reliability with their payouts, so you won't be shocked from one month to the next. The two investment types that I just mentioned can potentially suffer from NAV erosion as well. The categories that I discussed earlier, like REITs and BDCs, also are more likely to increase their dividends as time goes on, meaning that you won't have to reinvest your dividends to see them grow over time. So I hope this video gives you some hope if it's your dream to live off passive income through dividends, but you're worried you'll never have enough money to achieve that. There's a lot of investment options that exist for people who want to live off dividends but aren't wealthy. Or maybe you have achieved a lot of wealth and you want your income to soar even higher. You just have to do the research into these alternative investments that exist that offer much higher yields. But feel free to let me know your thoughts in the comments. And with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades, and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.